Happy New Year, mother. Anyways, we won't do that. Welcome, ladies and gentlemen, to what is the last stream of 2025. I was always going to be doing a live stream as we go into the final countdown of the new year as such. We got lots of things happening. You see a lot of people approach the new year in a different way. They have the expectation of new things happening in their life. There's countdowns for that. Maybe you're moving into a new house. Maybe you're doing something crazy in your life and you're going into 2026 with the countdown and the expectation that it's all going to be well. For me, I'm focusing on the new monthly candle, the new 12-month candle, a new daily candle, a new quarter. Everything is all happening. And we've had quite a bit of activity happening in the marketplace. We've just had the unemployment claims coming in, showing 119,000 people claiming benefit, less than the 214,000, which is what they had projected. Nasdaq's making a nice little pump to the upside. Could this day today be the Santa rally that we're all looking for? But what we're here to talk about today, guys, is just to break it all down. We've had some very interesting articles being pushed out. There is a discussion about this new refinancing of cheap debt, which was done back in 2021, 2022. And then, of course, we're now going into higher rates. And remember, the rates back then, which is what gave you your Bitcoin rally to the upside, they were around 0.25% on the US dollar. So when we look at it right now, it's 3.5%, 3.75%. So you can appreciate that is a little bit of a change in terms of how much corporate debt is going to get refinanced at. So we're going to break all of that down. We're going to highlight some key levels. We're going to talk about Bitcoin's price action yesterday. We had some awesome plays on the trade setups that we put out yesterday. It was quite an interesting move, but it was just standard hybrid system back to imbalances, playing those red vector candle recoveries. So, yep, Happy New Year to you all. 6 more hours. But, yeah, all my guys in Australia, Happy New Year to you. So let's just break it all down and help you guys understand how to approach the start of 2026 and what can we expect? Because I've got a bit of a Bitcoin price prediction that some of you be like, no, Tino, you can't say it's going to go to that price point. You can only say it's going to go beyond where we are right now, but we need to get into the reality of things. So let's just break it all down. So stock slip as bull run's third year near closes. So we've been a 3-year bull run, ladies and gentlemen. And that is evident because you can appreciate that we have got, of course, Ethereum's making a bit of a flavorsome move. Going to talk about gold and silver as well, guys, so make sure you stick around for that. Nasdaq, look at that, nice little reversal from the lows down here. And of course, when we look at the bigger picture of things on the Nasdaq, if we just go over to the market stuff right here, look, Nasdaq has been doing very, very well. It just hasn't stopped. From 2022 all the way to 2025, got ourselves a nice little rally to the upside. It hasn't stopped. We have had one severe correction, which was triggered by the Donald Trump tariff story. But I've told you this once, and I'll tell you it again and again. The stock market has a 100% success rate at recovering from crashes. It's just resets. Now, there is a little bit of a discussion going off. Check this out. Courtesy of Danny Krypton, okay? He's come out with something, and it says that a big storm is coming, ladies and gentlemen. What are we going to do? Anyways, he's making reference to this chart right here, okay? And he's saying that this right here is debt, okay? And it's getting refinanced, all right? Now, you've seen this chart, which tells you the cycles of when things are good, things are bad. Well, that's saying that we're going into a bit of a bad time on the restructuring of debt. Now, when we look at this, you can see it as maybe it's just hype. It says here that in simple terms, the US has loaded up on cheap debt. It says that cheap debt now has to be rolled over at expensive rates and interest costs are about to explode. Something has to give. Markets, taxes, spending, or the dollar. This kind of structural time bomb, Danny says, that doesn't hit immediately, but when it does, it hits everything. That's stocks, bonds, housing, crypto. Let me tell you something, whether the market crashes or not, if it does, big boys, funds, speculative investors, governments, pensions, you name it, They can't just stop trading. They can't. They are paid to manage people's liquidity. That means they have to move it to specific places. So let's make the assumption that the market is going to crash. Maybe we make the assumption that Bitcoin's price to slump to 55,000 and then surge to 355,000, 50,000, sorry. Is that on the cards, ladies and gentlemen? Do you all anticipate a little bit of a drop in Bitcoin? Or are you expecting Bitcoin to just continue to the upside? Mr. Sailor Boy, he's obviously optimistic about things. He's gone and bought himself another $109 million in Bitcoin. And good old Shift Boy, he's actually challenging the source of funding that Sailor's getting. How are you affording this when only last month there was debate and questions about how you were going to sustain dividend and interest payments on the convertibles that you had offered to investors just so you can pick up some more Bitcoin? Tom Lee's buying up a little bit more Ethereum, going over into the ETF principle. We haven't seen any activities on the ETF, which is explainable because, you know, around this time of year, it always ends up being a little bit quiet. So you just got to be mindful. We're going into a very, very big week next week, going into the calendar. Tomorrow, we have nada. Nothing's happening. Markets are all closed. Enjoy your time with your family. Don't trade crypto. And then Friday, same story. It's going to be a quiet day as well. Nothing much to report. And then, of course, going into the start of next week, we have the flavor. We have the non-farm payrolls, the average hourly earnings, the unemployment rate. Projections are it's going to come in lower at 4.5%. And the actual non-farm payrolls themselves coming in at 55K. It's clear as day that there is a problem across the board. But just to go back into this story over here, that if there is going to be a structural time bomb on its way, this is what you've got to look out for. Go over to the ETFs. Why? ETFs are deemed as money markets. There's $7.5 trillion worth of money sat over there. What's an ETF? It's just an asset that is made up of a basket of assets. And the diversification of those assets means that they're not all going to behave the same way. Some of them might go up, some of them might go down. But it's a way for investors to effectively hedge themselves against certain environments that they might not be favorable for. So if there is going to be a restructuring on corporate debt and there's going to be a problem, we've got to say to ourselves, what alternatives do investors have? Well, we've got the bonds market, we've got cash, we've got the ETF market, which is in principle made up of assets that are all together in an exchange traded fund. So if you want to go and buy yourself some bond related asset classes or ETFs, then you're going to start coming over to the TLTs, okay, the 10 years, all right? And then when you start looking at let's go into the bonds, okay? So you look at these ETFs right here. You can see that we're seeing a nice little climb in the BNDs, and you can see it's starting to move up. Remember, we're going into a change in the way interest rates are being delivered, and yesterday's FOMC report is saying that some of the participants of the FOMC are favoring rate cuts. Some of them want to keep things as they are, which explains why the bets for the rate cuts in January are coming in at 82.8%. So they're still favoring that rates are going to stay high at 3.5, 3.75. But next week's data is going to give us the idea if we are going to see more rate cuts. What we do need to see, because this is something that has been happening a little bit now with regards to the 4-year cycle, we're focusing on the ISM, which is the ISM cycle, which is right here. It says here that the ISM services PMI, which will be released on the 7th of January, is expected to be expanding still at 52.2 in the index reading itself. So that's good news. If it comes in lower, it means there's a contraction. We've got ourselves a problem. Now, remember, the ISM services and the ISM manufacturing data is related to the M2 money supply. Why? Because the M2 money supply is the potential purchasing power. And the ISM itself tells us if purchasing managers are putting money to work. Based on this data, 52.2 is the next projected reading, is telling us that purchasing managers are putting money to work if it does come in at that reading. And if it does come in at 52.2, it tells us that they are doing well with contracts, with employment, and their overall expectation of the economy in the future is looking promising, okay? So as long as we see a good reading on that one, then everything is all good for the US economy. Then we've got this story here about it being a problem with the debt refinancing. Well, we just need to print a little bit more money. Now, going into it all, ladies and gentlemen, look, cryptocurrency it's doing big things. Look, Metaplanet's buying $451 million worth of Bitcoin in Q4 as it races towards its 210,000 Bitcoin target. So the accumulation is there in Bitcoin, okay? But it's about the long-term play. How are you positioning yourself? These guys are buying that much Bitcoin? Awesome. What's Bitcoin doing? Let's just go and have a look at Bitcoin price action to say. Here we go. We've got a little bit of flavor moving to the upside. Did anybody exploit this move up yesterday? Because we had that move perfectly on the Platinum membership. Just to break it all down for you, this was my logic on Bitcoin. And this is how I apply the hybrid system. And I've done a few... So I started this trade setup story on September the 5th, 2023, okay? And just to put it into perspective, I haven't got it here, but the statistics are pretty simple, okay? What happened was from September 2023, okay, 5th of September 2023, I've put out nearly 2,900, where is it? Yeah, 2,680 trade setups. Okay, I've got 2,034 wins and 646 losses. Okay, that's roughly around a 75% win rate, but that's across 2,680 setups. Okay, but that is across 6 assets. All right, not 1, not 3, but 6. That's the NASDAQ, Bitcoin, Ethereum, Solana, gold, and euro. So it is a little bit of a trying thing to understand how they're all going to move. Even though they're all positively correlated, we can all agree that the markets haven't somewhat been positively correlated. If they were, then gold and Bitcoin would be behaving the same way, okay? But there are instances in the chart that when you look at it, it's screaming textbook recovery imbalance. And that's what yesterday's setup was about. We wanted to see Bitcoin come back in, and these are the sort of setups that you get, okay? And when we saw this green vector candle block, it's all hybrid methods. When we see the green vector candle block coming into play, recovery straight back into the red vector, Bitcoin gave us that beautiful flavor right there. It came straight back into the vector. The problem is, if you don't pay yourself because you saw the recovery and you think it's going to continue higher, you'll be paying the price because it came straight back down again. And that's the environment that we are in. We are in a big accumulation zone with Bitcoin. And when we see the pump, the dump, the pump, the dump, people are getting frustrated, but these are trading opportunities. And that's what the hybrid system does, okay? So that's the sort of thing you get with the hybrid system, ladies and gentlemen. It was quite an extensive breakdown. I was explaining the logic of how to read this chart right here in helping you understand the bids and the offers. And what I was saying on this chart here is that the bids started to slow down. So spot buying was slowing off. What's the opposite of bid support? Okay, it's the offers. And what we noticed here was price. If you look at this orange line here, price was diverging away from the participants who were buying it. In other words, they were bidding Bitcoin up. So they wanted higher prices and they were happy to buy as price was rising. And then we saw the offers coming into play, and that's what led the move to the upside. We gave the projection out at 6 o'clock in the morning ET and 11 a.m. GMT. But this is the sort of thing that you get with the trade setups. Now, we obviously spoke about gold, and we expected gold to make a little reversal to the upside, and that came through for us nicely as well. We saw gold make the move up, and that's what we were trading in the Asian session. But the previous day itself, it didn't really quite give us that information. But I am going to dive into something for you just to help you guys understand where we are with this silver and this gold story. As it stands, this is the Commitment of Traders report, the long report. There's the short report, which is this story over here. That's this one. It's just a quick breakdown on non-commercials, commercials, and totals. Gives you the open interest, happy days. Okay. Now, if you're going to start studying the the Commitment of Traders report, it does serve you to pay attention to what's going on to the long report. And this looks absolutely crazy, but this is where you've got to draw your attention to. It's the swap dealers. These are the guys that are going to be making the moves. Okay. We want to know what these guys are doing. Now, look, this is on silver. Everyone's like, the silver rally is going to continue. It's going to continue. It's going to continue. Listen. Swap dealers, as of the last report, are showing that they are net short 61,000 on shorts. Some of them are also long. but the distribution is showing that they are short, okay? Compare that to managed money, which is your hedge funds and, speculative traders and what have you. They are only short 14,000 and they are net long 36,000. So what's the difference? Look, the difference between in the spreads, you can see there's a little bit of a spread there, but there's a wider spread over here in terms of managed short money, which is the differences between the longs and the shorts as such. But when you see why changes in the spreads, it kind of gives you an idea of what the real story is. So what's really happening is in silver, there are mainly the big boys predominantly short. Any movement to the upside, they're adding to those shorts, and that is evident with this reading right here at 61,254. Now, when we take that information, go over to gold's price and silver's price, we can say to ourselves, okay, then what can we expect? Well, if they are predominantly short, then that means any ranges in silver are going to sustain themselves at short buying opportunities. So in other words, we see silver going up, they're going to build their shorts. It comes back down again, they'll probably try and take advantage of some longs, exploit those positions, and then it will start to roll, okay? But the big boys are predominantly short on silver. Take that information and look at where we are with gold. What do we see with gold? Swap dealers are 262,000 contracts short on gold. That is a problem. Yet, managed money, the fund, retail traders and what have you, they're all long 152,873. In my opinion, it's a washout. They're going to wash everybody out. And gold's going to retract. Why? Because they're saying it. Interest rates might not get cut. And if this week's data or next week's data comes in and sustains the idea that we've got an okay economy and we can actually focus on inflation, then this would then make sense as to why these swap dealers are net short. And of course, the managed money, which clearly doesn't have any dominant side to it, they are clearly going in the wrong direction in hope that gold is going to go up. Naturally, we are in an easing cycle, okay? But how long are we going to be, well, not to say how long, but when are we going to get that fixed path to seeing money being cheaper again? Are we going to go to neutral? We're never going to go to neutral again. We're going to get those cheap rates because money is being refinanced continuously, okay? And it's getting refinanced at higher rates. So when you've got this information here, just take it diligently. Now, look, when I'm talking about price action overall, don't look at one trading day. I mean, look at silver right here. Silver is going to try and make a stab towards this red vector candle. It's the last trading day. There's going to be volatility across the board. We know that, all right? But in the bigger picture of things, the positioning of traders is clearly showing that they are all short on commodities, which does grant the question that if we're going to have higher rates for long, then they've effectively priced that logic in, and now they're going to position themselves for when the price does start to correct, and then they get ready to offload on the expectations that interest rates are going to get cut. Fed speakers have come out and said that they are mixed in between the idea of whether they should cut rates or just keep them on hold. We don't like that. We need a clear-cut path to understand where we're heading into the future. Now, going into it all, ladies and gentlemen, Bitcoin is going to be printing a new 12-month candle. Okay, let's just bring that up for you all. New 12-monthly candle, and it's doing very well. I mean, if Bitcoin were able to get above 93,000, which is the monthly open of this candlestick, then boy, we're going to be in for some very nice flavor in Bitcoin, ladies and gentlemen. The problem is we've got a lot of Bitcoin. Bitcoin is being subject to a lot of macroeconomics. And that's the problem that we've got, ladies and gents. What's going on here? Hold on. Hold on a sec. What's this? Hey, Tia, but when unemployment coming lower, isn't it bad for rate cuts? No pressure from the Fed. Greeting from Germany. How you doing? From Mad Love from Germany. To Germany. Yeah, if unemployment rate is lower, then it means they don't have to focus too much on the labor market. They know there's a contraction, but does it represent the economy is struggling? Remember that, the beverage curve. If there are more people unemployed and less jobs being offered, then we're having a little bit of a situation. But what's going on is clear as day that we are seeing people being in jobs because today's reading came out. Where is it? Let's have a look at it. Unemployment claims came in at 199,000, as opposed to 219,000. And then you've got the economy itself being expected to expand or stay in an expansionary phase, which is at 52.2 right here with the ISM services. JOLTS job openings report is being projected to come in with more jobs, okay? So even if the unemployment rate does tick low, which is what they're expecting, It's making the Federal Reserve say, hold on a second, we were focusing on jobs. How bad is the labor market? Well, it's not too bad. We know it's cooling because it's nothing that is of a surprise to them. Then it means that they've got it under control. And that's how the investors will translate that, which explains why they think that they're going to keep rates on hold. Okay? But then that means they're going to keep it on hold so that they can start working out how to address inflation. All right? And if they can get inflation down to the dual mandated target of 2%, then we're going to have higher rates for longer. Again, if you go into the data for March 2026, they are edged towards now. They've increased it 51.7. They've increased it to 3.5, 3.75%. So they still think that rates are going to be held at that point. And that's going into March. So if the rates are going to be higher for longer, then you can appreciate that participants and investors are going to go over into bond-related ETFs because the yields are going to be higher over there, and they're going to be able to generate a return holding ETFs that are bond-based, whether it's the 2-year, 10-year, 30-year, or the 5-year, all right? Remember, interest rates will always dictate what money is going to do. And as long as you align yourself with that, then you can start focusing on how Bitcoin's going to be behaving, okay? Any questions? Recession is not coming. AI will 10x from here. It probably won't. Tino, please trim your beard. Nah, forget my beard, man. Don't worry about that. Okay. Any questions? Do we have any questions from that? People wondering about rate cuts. We have the highest amount of debt coming into history at 2026. They will do everything possible to bring rates down so we don't have unserviceable debt. Look, in my opinion, there is, whether or not the US is in debt, okay, they do have the means to actually protect themselves and avoid a catastrophic event. They won't allow the markets to be catastrophic in that sense. The last collapse was the banking crisis, all right? But when you think about it, all that money that they had borrowed simply came from the Fed. So once they borrowed it all out and there was nothing left, they called it all in. They couldn't get it back. And then, of course, everything collapsed. It was a reset. So, again, the debt for the US is $38 trillion. Is that really a problem? Well, if you want to buy US debt, okay, then you look at the current debt from a national basis and you think, God, how much money do you owe? Well, you'll be like, well, you know what? It's not going to change anything. They'll still print anyway. And when we look at the bonds market, the US 10-year, it's still a valid investment. It is, all right? Because there's too much money involved in it. You can't get rid of fiat, all right? You can go into a big financial reset, all right, that they all talk about. But you've got to kill the mindset of fiat first. And you can't do that. It's just too ingrained into people. When things are bad, they go to the bonds. Okay? If they're really bad and they're really concerned, they'll go into cash. So what event is going to trigger the fluctuation of the dollar or the devaluing of the dollar? Well, your dollar is smacked either way. And if AI is going to sustain itself, well, going into this new quarter or going to start the new year, investors are going to be knocking on all these companies' doors and saying, thank you for all that capital expenditure that you've been putting out in 2025 and all the business deals that you've done. We now want to see a rate of return for our dividends that we have, should I say, for all the investments that we've made in buying your stock. We want to know if the dividend is going to get paid out because we know AI is expensive. Remember, before it was the Magnificent Seven had effectively the monopoly of AI. Now it's all starting to break apart. In other words, who's going to do the better business deal and who's going to earn the most amount of money from it? So what was once a monopoly is no longer a monopoly. It's now mutiny on the bounty in terms of the AI market, because if NVIDIA are going to be the one that succeed, then everyone's going to NVIDIA. Forget Microsoft, forget Google, forget Meta, okay? Whoever's doing it better, investors will go over there. And that's the problem you got with investors. They are fickle. They don't care. They just want the yield, and that's all they care about, okay? Bola, man, how you doing? I don't trust the numbers the US authorities give us. No one does. Rotation will be huge. The interest payment is about to be 21% of the budget, which is the second biggest on the budget. Trump is not going to allow that. Look, again, the dollar itself, for every dollar that the US earns, it owes 126%. That is nuts. All right? Every dollar it earns, it owes 126% on top. It's not a sustainable business model. But the only way that you can just sustain it, because we'll be saying that it's 126% now, when it goes to 150%. We'll be like, well, it was a problem at 126. Now it's 150%. It's not really a problem now. Debt at 20 trillion was a problem. Now we're at 38 trillion. Is it really a problem? No. But the one thing that will happen in the market is it will contract and it will expand. It will contract and it will expand. And you're getting the questions asked like, what Warren Buffett, why is he so heavily invested or getting invested in the Japanese yen? Well, there's a rotation in the way they're doing business because the rates are being increased. When we go into January, we're going to know if we're going to go up to spot 1% or 1 spot percent, or we're going to go to 1.25% on the Japanese yen because their exports are flying. And even that being said, it's a good situation for them. But you can see dollar yen is climbing up into Forex interventionary levels. So we're going to have a wonderful 2026 when it comes to Forex intervention. I believe that the yen are going to do that, you know? A washout, is silver going to repeat 1980 or a 2011 drop? You have to understand, when it comes to silver, I'm giving you the heads up here. The swap dealers who are the main players, okay, they're the ones that are positioning themselves short on gold and short on silver, okay? We go over to gold to buy it when the interest rates on the dollar are going to be decreased. But we're starting to get insight that that's not going to be the case. We might actually hold. So what could be a hedging process right now, okay, is swap dealers preparing themselves for an event that is to reaccumulate. So they are shorting on the futures and buying on spot. When you see the swap dealers are heavily leaning towards short positions, and then you're looking at the chart and thinking, oh my God, it's going up. What does it all mean, Tino? They are short on futures and they're buying up spot. That's the only logic that we can run with to understand what the big boys are doing. Look, man, managed money is only 14,000 short because these guys are just looking at the chart, seeing it going up. Look at gold. They are short 20,000 contracts, but long 152,000 contracts. But swap dealers are short 262,000. And there's been a massive spread in the increase of that. So they've increased by 26,628 positions. There's commitment to load up shorts on silver and gold. And when you read this information, you can then go to the chart and say to yourself, okay, then what's the possible factor? Well, gold hasn't stopped going up. The last day of accumulation was all the way down here at the 4,000 mark. Gold goes down to $4,000. That's not a problem. If they turn around and say to us next week that we're going to cut the interest rates, gold will then start going back up again. Okay? So that's something you got to take into consideration, ladies and gentlemen. What price is good to buy silver? I said it in my video yesterday. A good spot for silver is to consolidate back down to around the $64, $60 mark. That's what I'm looking for with silver. Okay? I'm looking for these price levels. Okay? Inside around these ranges here. And that's still good. All right? If it continues to go up from here, it goes up. You got to just take the risk and say, okay, it might go up from here. But you know where you are in terms of positioning here. You know what their positions are. And when the next report comes out and we see that this is either increased, then we're just getting more information that they are going in a hedging exercise, which means that they're going to be shorting it from a higher price point. So even if silver does come back up again, it's going to roll back down, fulfill that obligation. Swap dealers are going to be going spot on silver, buying up physical even, okay, short in the futures, making the money. It's a hedging exercise. That's all it is. Happy days, Noreen. Bank of Japan unwind is already happening. I believe it is already happening. Yes, sir. It is starting to unfold. It is going sideways, but wait till we start the new year because we're going to see this zone out. I mean, look, if the yen itself collapses beyond 0.0063455, which is this low right here, we do have one more zone that they could actually breach. If we just look at it, and you can see we've got this last zone right here. They could be waiting for that, Find out where we are with the interest rates and then done. Okay? Metal detectors love metal. What price is good for buy Bitcoin then? What price is good to buy Bitcoin then? You can't look at Bitcoin's price. You have to look at where you are economically around the world with everything. Rates are looking to get cut, cool. The second you start seeing the market talking about rate cuts and they got conviction to do it, wherever Bitcoin's price is, you buy it. That's the simple logic. What do you have now? Inconsistency behind that story. because they're not really consistent with rate cuts. If we start seeing the bets suggesting that we are going to get a rate cut going into 2026 at 3.25, 3.5%, then you can trade that logic on Bitcoin and then go long at around the 88 mark and then hold until 115, 120. If you're not happy with a 25K move in Bitcoin, then okay, you've got problems in the game. Like you clearly, it's not enough for you. You need Bitcoin to go from 88,000 to 490,000 or even 10 million. And then you'll be like, should I get rid of a little bit? Nah, diamond hands, man. Hold on to it. You know, I mean, it's just mad. Price of silver and gold, Bitcoin, just buy what you can afford. Hold 90, and 90% will lose trading because you haven't got knowledge of T. Oh, flip. No, I was trying to work out where you were going with that. Tina, is it possible that Bitcoin can come down to 60K in the first quarter of 2026? It is very possible it can go down. Because if they keep on giving us the idea that rates aren't going to get cut, then money's going to be expensive for longer, Bitcoin's going to go down. Look at how aggressive they were on the actual ETF. They have not stopped getting rid of this ETF. All right? And that's a bit of a problem for me. We need to see accumulation. Metaplanet is buying up the Bitcoin. Cool, that's great news. Tom Lee's buying up more Ethereum. That's awesome. Okay, cool. You're buying up $130 million worth of Ethereum. Your price really isn't a problem for it. It's going into Ethereum itself. Ethereum can easily go back down to the $2,000 mark. It's very close towards it. There's nothing wrong with it going there. Look, they had this rally up. They cleared that range, it came down, bought from it, and sent it back up again. The same logic's going to come into play here. They'll bring it down and then move it back up again. You know? But if you're not aligning yourself with what's going on, macroeconomically speaking, okay, because that's where we are with everything, then what the hell are you doing? Doesn't make sense. Okay. Anyways, listen, if you are new to the channel, welcome. My name's Tino. Mad love and respect. Happy New Year to you all. I'll be getting back in touch with you all on the Monday. What's the date? Hold on a second. Here we go. So Monday, the 5th of January. Okay. We'll be kicking it all off with the ISM manufacturing PMI, which is coming in at a contraction on Monday. But if you want to get involved in the Platinum membership, we're going to be changing things around soon. I'm hoping. I want to try and get a trade room set up. It's some things I do want to get sorted out. And still doing the setups and what have you, but just really trying to focus on changing everything up because it's the new year, new way of doing things. Do we have time to do it? Different story. But we're going to be doing all of that madness going into 2026. I will be active with the Platinum members over the new year period. There will be opportunities for us to exploit. So I'll be getting updates over to those guys. If that's something you want to check out, get yourself involved. It's pinned to the top of the chat. And you get access to the masterclasses. But with that being said, guys, Happy New Year to you all. Mad love and respect to you all. It's been a crazy year. And just always pay yourselves, man. It's a simple mantra. You make money in the market, take it, all right? And live to tell the tale. Because the market will always be there. It really will always be there, all right? With that being said, I've got nothing but love for you all. Take care of yourselves. Happy New Year. And I'll be speaking to you all soon. My outros are absolutely dog. And guess what? Nah, I'm not even going to tell you to buy XRP. Forget that. Mad love.